In today's episode, we're going to look at the long-term chart here for the Bitcoin price, and I'm going to show you how 2021 looks like it's mirroring 2017's bull cycle, and there is a high chance that we're going to pump 620%, taking the Bitcoin price to over $200,000 before the end of the year. And also we'll be seeing the similarities, the different patterns that are forming from the 2017 breakout and the 2021 breakout that we're having right now. We'll be checking out the 15-minute chart here for the Bitcoin price. We've formed an inverse head and shoulder here, as you can see on the chart. Are we going to come all the way to these technical price targets? We'll be discussing this in today's episode. And JP Morgan offers 3 reasons investors should consider Bitcoin despite its unconventional and highly volatile nature. Guys, if you like this content, make sure to smash up the like button and subscribe if you haven't done yet for coming updates. And let's go straight into the video. Hello there, Andy here, and welcome back to another episode of Bitcoin Sensors, where you subscribe for the quickest technical analysis and news on Bitcoin, cryptocurrency, and the financial markets. I am not a financial advisor, so don't buy or sell anything that I say, and if you do so, do your own research. And said this, let's go straight into the charts. This is only speculation. Past performance doesn't mean the future results, but there are so many similarities that we can get a conclusion of where the price can go in the next years. This peak over here was the late 2013 all-time highs, which was about $1,100 per Bitcoin. We had this huge bear market, this huge accumulation phase for almost 3 years, as you can see here on the chart. When we arrived to all-time highs, we broke out of it and we went all the way to $2,900. This was a pump of over 150%, as you can see here on the chart. After that over 150% pump, we can see that we had a correction here. We consolidated into this triangle, and then we had this correction here. This correction from the top of the pump that we had after breaking all-time highs to the downside was about 36%. We went from $2,900 all the way down to $1,900. And after this, we went all the way up to $19,000 in less than a year. This was only in a few months, taking the Bitcoin price to pump over 950%, taking it to the next all-time highs of late 2017. So we can see this aggressive move after breaking the 2014 all-time highs. When we break the all-time highs here, we can see it's an aggressive pump. A lot of people FOMOing in because the news is out there. Bitcoin's broken all-time highs, everybody FOMOs in and buys, and then it consolidates and has a dip. This is absolutely normal. So fast forwarding now, we can see from the peak of 2017 going to this multi-year bear market, which is almost 3 years. We come all the way back to all-time high here, and now we've also had a great pump from all-time high up to the $42,000 levels, was 125%, as you can see here on the chart. From $42,000 down to $28,000 that we went down yesterday, this is over a 30% correction. So if we see the similarities from the past, we can see the pump from breaking all-time highs in 2017. We went over 150, about 160% pump before we had the consolidation phase. And this time we pumped 120% after breaking all-time highs, getting into this consolidation phase. So let's just say this is about 2/3, so it's a bit less than the last cycle. So if the bottom here was $28,000 and we pumped from this bottom here about 950%, 2/3 would be more or less 620%. Let's just say for the sake of it, just so we don't get too exact. So if we go from the low here of $28,000 and we did pump 620%, this would take the Bitcoin price to over $100,000, as you can see on the chart. Obviously, this is speculation. This is not guaranteed it's going to happen, but we can see the similarities of the patterns and the cycles here, and especially this time, institutions, banks, billionaires getting heavily into Bitcoin and cryptocurrency. We can see buy orders of tens of thousands of Bitcoin, and this didn't happen in the 2017 bull cycle. We did not see tens of thousands of Bitcoin buys. We could see 50, we could see 100, even a couple of thousand sometimes, but this was very rare in the 2017. This was mostly retail buy orders. 1 Bitcoin, 2, 10, 20 Bitcoin. Now we can see thousands of Bitcoin buy orders, so it's totally different as the 2017 bull cycle. And taking a quick look at the 15-minute chart here for the Bitcoin price, we can see that we formed an inverse head and shoulder. This is a great trading opportunity to place a buy order here from the breakout of the neckline, and the measured technical move would be getting the head to the neckline, and from the breakout we can see we can arrive around the $35,000 area, and we can see this is just the support area of this huge symmetrical triangle that we've been forming here for weeks. So we can probably see these targets in the next few days coming up all the way to $35,000. And if you're an experienced trader, I'll be leaving links in the description of Bybit, Femex and JUJACKPOT. If you click on that link, you'll be getting an amazing bonus. Bybit has got a promo code now. If you put JACKPOT, you'll be getting up to $600 to trade with, guys. All this information is going to be in the description, guys. I know I am late for this trading signal, but you want to make sure to subscribe to the channel and smash up the like button. This will extremely help the channel out. I'm going to come with daily videos very, very soon. The best trading signals, the best altcoin project that you can invest in. So guys, make sure to subscribe to the channel. Checking out the news today, JP Morgan offers 3 reasons investors should consider Bitcoin despite its unconventional and highly volatile nature. The firm explains the benefit of investing in Bitcoin despite its large and frequent price fluctuation. Economist and crypto trader Alex Kruger shared the document on Twitter. Why bother considering an unconventional and high volatility hedge? 3 reasons. Equity and credit valuations look record rich for a very young business cycle. Conventional hedges like DM bonds barely serve as insurance when US 10-year rates are near 1%, and some as yet unseen shocks, materially higher inflation, economically debilitating cyber attacks, or climate catastrophe could favor an asset that operates outside conventional channels. Markets that have high volatility is where the best opportunities are, something especially like Bitcoin that's got a bright future ahead. Gold at the beginning was very volatile as well. It had a low market cap, and once it gets to trillions of market cap, then the volatility goes down. Bitcoin can go to trillions of dollars of market cap, and then the price of Bitcoin might cost $1 or $2 million. Then the volatility is going to go down because it will be so liquid that if a billionaire wants to sell 100 Bitcoin, it won't affect the market hardly because there's going to be a lot of liquidity. Guys, this is going to be it for today's episode. If you haven't checked out the Bitcoin Census website, if you're new into Bitcoin and crypto, you got great tutorials, reviews, how to buy, how to store, and how to trade Bitcoin safely here. You got the latest news, so I'll be leaving a link in the description of the Bitcoin Census website. And if you haven't seen the best tutorial of the JUJACKPOT leverage trading platform, I'll be leaving a video popping up on your screen. A massive thank you for tuning in. Make sure to smash up the like button and subscribe for coming updates, and I'll see you in the next one.